Introducing a new era for discerning Australian investors. Brought to you by Ausbiz and backed by deep market insight, professional analysis and a proven track record. Our focus is simple: to connect you with exclusive and compelling investment opportunities. Discover what's next at ausbizcapital.com.au. This program is brought to you by LGT Crestone, local private wealth expertise backed by the stability of a global presence.
Hi there, welcome to the Global View as we kick off another trading week here in Australia, a shortened trading week. I hope everybody had a lovely long weekend. I'm Nadine Blaney. All right, global stocks still traded on Monday, and they were taking stock of China-US trade talks. The Dow Jones Industrials was pretty flat. The S&P 500 and the NASDAQ were up just marginally, while small cap stocks outperformed. The top three stocks included Albemarle and Enphase Energy, though Warner Brothers did take a turn by the end of the session. Top three laggards were Intuitive Surgical after a downgrade, Universal Health Services, and Edison International. Archer Aviation was higher, along with other U.S. aviation stocks, after the U.S. president made a drone defense order. Tesla shares were down, but they did reverse course. Baird has downgraded the company on Elon Musk's political activities, saying the recent incident between Musk and Trump exemplifies key risk associated with Musk's views. McDonald's shares were down after Morgan Stanley downgraded it to equal weight. It sees challenges, including wage pressure on consumer budgets, health considerations, and a possible mixed future outside of the U.S. Trade talks began in London between the United States and China. They will continue today, we're told. All of this, of course, aimed at cooling a trade dispute between the world's two largest economies. U.S. President Donald Trump says his administration is doing well on that front. Meantime, U.S. economic data showed wholesale inventories increased in April as prescription medication was stockpiled in anticipation of tariffs. Investors are awaiting U.S. inflation data on Wednesday that may change expectations for the timing of a rate cut by the Federal Reserve. U.S. Treasury yields were lower. The yield on the U.S. benchmark 10-year note declined 2.8 basis points to 4.48%. The U.S. dollar came under a bit of pressure around those trade talks. It did, though, increase modestly. Just to note that U.S. non-farm payroll report beat expectations on Friday. And Bitcoin is doing well, last check, up by more than 4%. And in Europe, ECB member Holtzmann said that the ECB's inflation target had been reached and that a longer pause in the easing cycle is possible. In commodities, OPEC oil output rose in May, but oil prices hit multi-week highs yesterday, buoyed by that weaker U.S. dollar. Brent crude oil hit 0.8% to $67. Gold prices edged higher. Silver hit a more than 13-year high. So let's get more on the markets and what it means for us here locally. Steve Sosnick from Interactive Broker joins me now. Steve, good morning. Good afternoon to you, I should say. Talk to us about the session that was on Wall Street.
Good morning, Nadine. Welcome back from the long weekend. I think basically there wasn't much to talk about today. And so what little there was to talk about, you pretty much summed up. I think, we got up to the 6,000 level on S&P 500 on Friday. We kind of churned a little bit through it. The usual pattern was in place. A little bit, wake up, find the futures a little bit lower. By the time I'm out of the shower, they've rallied a little bit and sort of flirting with positive line. They tried to take them higher today, but there was really no follow through. And the stories, as you mentioned, were pretty much, Tesla turning around and Apple. I think some of the it didn't end up doing much on the day, but I think there was some enthusiasm about their Worldwide Developers Conference, and what we learned wasn't all that earth-shattering. So the stock sort of meandered throughout. That meandered a little bit lower. Not much to talk about today. Not a lot of catalysts.
We'll still find something though, Steve, of course. I'm wondering what you make of the China-US trade talks. Like, does it feel to you as if investors are, excuse me, becoming somewhat immune even to some of the headlines coming from trade and tariffs? Is that to potentially their detriment going forward?
It could be. I think basically, as I in something I put out today, I said essentially, as long as we don't learn that they're having food fights, we can portray this as being a positive development. I think back to the first Trump administration, where I would go to sleep and futures would be flat or a little bit lower, and then I'd wake up and futures were higher. And the reasoning was, some sort of good news coming out of U.S.-China trade talks. Even if there weren't any scheduled, someone would plant that story and the market would go up. So it's a pretty surefire way to get the market moving higher. Someone asked me today, how will I know if they're not going well? And my thing there is watch the bond market. If you start, they have tremendous leverage in the fact that they could just sort of back off an auction one day or participate lightly, and you'll see bond yields zoom. And we have actually some auctions this week, 3s, 10s, 30s. I'm not expecting that, by the way. That would be sort of a semi-nuclear option on the trade negotiations. But literally, as long as they're in the same room together, as long as they can figure out how to order lunch together, I think that the market will perceive any continued discussions as a positive.
Okay, so we will take that and file that away. Look, we cannot help but keep an eye on LA and what's happening there with the National Guard being called in, and news that the US President Donald Trump is looking to send some Marines to LA, which is unprecedented. Should investors be cognizant of any sort of ripple effect that could flow on from that?
That's a tough one, because I think, again, they're watch the dollar. I'm trying to think of a fairly neutral way to word this. I mean, basically, markets don't really mind unless this stuff affects them directly. I literally had a friend who I was talking with today, and I said, does some of this stuff bother you? And he was like, well, my portfolio is doing okay, my business is doing all right, so I guess I'm fine. I do think that there's a lot to watch for here. As it's 3,000 miles away, but it's it's something that is very concerning, because calling out the National Guard and now potentially calling out the military, which is strictly prohibited, and that gets us into places that gets us into places as a country, as a society, that I don't know that we want to get to. But as of now, stock investors just sort of see the momentum working positively. The bottom line, again, geopolitics always take a back seat to things like sales, earnings, et cetera. So unless this really spreads out of Los Angeles, I think the markets just kind of ignore it because they don't know what to do with it. But I do say, as a citizen, I'm watching this very closely, because there's a lot of potentially concerning developments here.
Yeah, okay. It's hard to know how that is going to end. I just didn't know if it was resonating on Wall Street. So I had a chat with a guest earlier this morning from BCA Research, and she was of the view, Irene Tunkel, that the Mag 7, the big cap tech stocks, are the place to be, because even if the U.S. falls into recession, even if there is social unrest, these companies have proven that they can continue making money and making money for investors. Are you of that view, Steve?
Yes, but I actually started to run some numbers today, and I didn't have a chance to put them out. So I'll probably publish it tomorrow. But I basically took the performance of the S&P 500 from year to date, and used how S&P breaks it out into SGX and SVX, the S&P Growth Index and the S&P Value Index. Just arbitrary way that they have of cutting the S&P 500 in half. Well, the S&P 500 through Friday was up about 2%. The growth sector was up about 4%. The value sector was essentially flat, like down by a hair, like I think 0.06% or something like that. So you got double the gain. You basically, almost, it's clear that all the gains were coming from the growth sector. And when I broke it out through April 8th, which was the low close of the market in its in the tariff tantrum phase, the S&P 500 is up about 20%. The S&P 500 growth, the SGX, the growth was up about 27%, and the SVX was up only about 13%. So double the performance out of the growth sector. But here's the thing with the math involved. When you break that back down, all that stellar outperformance since April 8th implies that there was tremendous underperformance in the down market portion. So what you're getting into here is these stocks are the leaders. When the market's going up, they are the horses you want to be riding. You have to. They're such a huge part of the market, and the momentum is so driven by these stocks. But what it also means is if there's a hiccup, and I don't know that there'll be another hiccup again to that degree, but when there always are. But when there's a hiccup, these stocks are going to underperform probably to the same degree, because we saw it before when people wanted to get out of those trades because they're so crowded. There's a sort of a dearth of natural buyers because the demand just keeps getting sopped up every single day. So if the demand turns to supply, you get these hiccups. And so one of the things that I'm sort of focusing on now is, I've used the phrase, don't fight the tape, but insure it. But I'm realizing the place to insure it is actually in the big cap tech, or actually the NDX, the NASDAQ 100, since it has moved essentially in lockstep with the S&P Growth Index, because they're both so dominated by the mega cap techs. So when they're winning, they're the place to be. But when they are losing, they are the place to avoid. The numbers actually really showed that in stark contrast when I looked at them today. And take a look at ibkrcampus.com. They should be up tomorrow.
Yeah, all right. Well, you've given us something to do our homework on. Steve Sosnick from Interactive Brokers. Thanks as always.
Thank you, Nadine. Take care.
Have a good one. Go. There's a pretty good assessment of what's going on markets. How will the day pan out here? Well, we are expecting to see a pretty flat open. But again, I had a chat with Jessica Amir from Moomoo. You can find that interview online. It's up there now. She reckons we could be touching records this week. 8,800 is the level to watch. So keep an eye on that. Andrew Gagan will join you next to get you across the first hour of trade this week.
This program was brought to you by LGT Crestone, local private wealth expertise backed by the stability of a global presence.